Hello traders, welcome back to the channel. This is Vishal and you're watching the weekly sectoral analysis. Now as usual, I'll be starting this video with the monthly time frame chart first. Now at last, after a correction of almost 5 months, we have one candle which is pretty big in size. It's a big green candle, and this big green candle is also able to probably not engulf but at least try to take away all the bearishness which was created in the month of Feb. This is a good candle. This is a good sign, and it is also a good sign because it has been able to appear at a place at a juncture in the market when Nifty spot was trading close to this 23.6% Fibonacci retracement, and this is a long-term support. This is a good thing. Going ahead in the weekly time frame chart, we can see that the trend is still flat. The initial bounce back has been pretty sharp. It has been very, very sharp. And unlike all these other pullbacks, which we can see in the weekly time frame chart, this pullback is much more sharper, has extremely high momentum. But this candle, which we can see, is a gravestone doji. Generally, gravestone dojis are a bearish candle. And this bearish candle is appearing because we have a resistance band which I have marked over here in the greenish color, and the resistance band is between 23,416.80 to 24,008, and we can see that Nifty is seeing some sort of pressure from the higher levels. And in the daily time frame chart, we do have a trend line breakout. Okay, we do have a trend line breakout over here, which is a good sign, which is a bullish sign. And we also have some resistance from this previous high in Nifty, and last few days have been consolidating. So we need to understand one thing, that see, the monthly time frame chart is showing signs that we are trying to bounce from a good support. Then if we have a look at the weekly time frame chart, we have a sign that okay, it was a good momentum, and now what we can see is some sort of selling pressure which is evident due to this particular resistance band. And if we have a look at the daily time frame chart, it is showing us a very good trend line breakout and some sort of consolidation. So generally, when all the three time frames are showing you some different sort of state of trend, it is certainly not the best time in the market to initiate any trades and try to make money. It is a time to wait patiently for the markets to get in a zone where at least, if not all the three, like number 1, 2 and 3, if not all the three, at least we have two time frames which are in sync with each other, and then probably we can make money either on the downside or either on the upside. So I think we are consolidating, and one of the reasons we are consolidating is not just because of this particular resistance band. It is also because I think market has been able to go up much faster than it generally does. So I think prices are also away from the moving averages. RSI has also hit 70 levels after many, many months, because the last time when RSI was above 70 was in September of 2024. So right now it's ending of March 2025. So this is after a very long time, and this is a good sign, but I think some more consolidation cannot be denied in the overall market, especially in the Nifty spot. Now going ahead in the Bank Nifty, I should say the momentum is extremely strong in Bank Nifty. When we have a look at the daily time frame chart, we can clearly see that the momentum has been very, very strong. It has been very fast. Even in the weekly time frame chart, we can see a lot of strength in the weekly time frame chart. But again, RSI has been able to surpass 70, good sign. But the prices are slightly away from the moving averages, and that is the reason I think some sort of consolidation cannot be denied. Even the price is now trading above both the dual moving averages in the monthly time frame chart. So we have almost all the positive signs for banking index, but one particular thing which has impressed me is that we have been able to surpass the previous high in the daily time frame chart, which did not happen in Nifty. Okay, So I think this is a good sign overall, but we can say that we are slightly overstretched in short term. Some consolidation cannot be denied. Immediate support, I would say immediate support for short term traders is at 51,030. If we break that level, then the next support could be within this zone, because this is a upside gap, and that gap is somewhere between 50,800 to possibly 50,640 or 650. All right. Okay, going ahead in private banking space. Private banking space looks much similar to the banking index, and we can see we also have a trend line breakout. Yes, you will say that we have not been able to test over here. I agree, but we have been able to test multiple times in this zone. So I think this is a good trend line breakout. Strong uptrend, RSI above 70. Last time the RSI was above 70 was in this, I think in the month of September 2024. Again, a sign of strength, and prices are away from the moving averages. So I think again, I will have to say that some sort of consolidation cannot be denied in the private banking space. Going ahead in PSU banking index. Now, if you have a look at the PSU banking index, it looks a little bit different than private banking space, shows lesser strength, but still I would say that there has been a decent trend line breakout in the weekly RSI. I'll just try to use a different high. Okay. So now we have a decent trend line breakout. It has just occurred. It's not very strong. It has just occurred in the previous week. In the monthly time frame chart also, we have been able to bounce back pretty nicely. This is a very nice candle which is trying to possibly take away all the bearishness which was created in the month of Feb 2025. Again, a good sign. Candle is not very impressive in the weekly time frame chart, but the reason for that is very obvious. If you closely have a look at the monthly time frame chart, you will understand the main reason. This previous high, this zone, I think this zone is trying to provide some sort of resistance, immediate resistance to the banking index. Overall, it looks positive, but any sort of consolidation, I think it cannot be avoided. Any sort of choppiness cannot be avoided in the short term. Immediate support, if you're asking me, then immediate support is this one. This zone which I've built over here with the help of one tool. You can see these are the two lows, and if we have a third low over here, then this will become even more stronger support, and this support I think is within the zone of 6062 to 6076. It's a very small support, but I think it does work. Now the view overall is I think very range bound choppiness is visible. So I think once we start trading above the recent high over here, which is at 6366 or 6370, that will be a positive sign. And again, if we close above 6486 or 6500, it will be one another positive sign for banking index, especially the PSU banking index. Energy pack. Now energy pack is a completely different horse, because what has happened over here is the rally was extremely high momentum rally. The correction was also with equally high momentum. And now we have retraced and close to this 61.80% retracement. And this retracement is accompanied by this previous high, which makes this support zone very strong. And at this strong support zone, we have a good positive candle, a good sign. Going ahead, having a look at the weekly time frame chart, we can see that we had a positive divergence over here between the RSI and the price, and the momentum continues on the upside. By looking at the weekly time frame chart, it looks that yes, some more upside is possible, but if you just have a look at the candle which is visible of Friday, we can see some pressure is there in the short term, and the pressure is coming up from the recent high in the daily time frame chart. Okay, so I think once we surpass this high, which is of 34,230, 34,250, and we sustain above it, then possibly some more momentum on the upside may be visible in the energy pack. Autopack, I think it is very, very different looking sector in comparison to many other sectors right now, especially when you compare to the banking space and the energy pack. Yes, we have seen a lot of strong momentum in the last week, but this week again we have dropped down, and this drop has come on the back of very, very strong resistance which is visible, because this low now becomes a high. Okay, so as of now I think it's very, very difficult to determine what is going to happen, because in the weekly time frame chart things are looking okay. They are not looking very bearish until and unless some negative candle is visible. In the daily chart things are not looking that great. So I think there is a disconnect between the daily and the weekly time frame charts. So I have no view as of now. But yes, if we surpass this high, then things can change, which is the high of 22,080 or 22,100. Then I think things may change. Consumption pack. Consumption pack, again, I can say that it has been able to bounce back from a long-term support, which is 50% retracement of this entire rally. And it is a good sign. We have a decent positive candle, although the positive candle is not very large, which can probably take away all the bearishness which was created in the month of Feb. But still, something is better than nothing. And in comparison to the weekly time frame chart, sorry, the monthly time frame chart, the weekly candle which we had last week is very impressive. This week we have a red candle which is smaller in size. So even if the bearishness is visible, it is not with extreme high momentum. Somewhere over here, I think in this zone, the consumption pack showed its true color, it showed its strength, and now we are above a particular resistance. Because this particular low was acting as a resistance, we have been able to surpass it. Currently, we are just consolidating. There is no view over here. We are just consolidating. But if we say that if we surpass above, say, 10,900, a little bit more upside will be visible in the consumption pack. Okay, finance, one of the strongest sectors over here, which is visible. Okay, now you can see that the trend is up in the monthly time frame chart. The trend is extremely strong with extremely high momentum in the weekly time frame chart, and even the trend is up in the finance pack in the daily time frame chart. RSI pretty much overstretched, prices away from the moving averages. So I think it's a good time to stay away from the finance pack. Yes, it's bullish, but buying any stock or participating in an index at a juncture when there is no risk reward, like would you like to start buying somewhere here, or at a juncture when the stop losses are extremely large, when the prices are overstretched? Ask yourself, is it a good risk reward over here? The answer is no. So I think it's a good time to understand that it's bullish, but any sort of dip or consolidation will give you a fresh new entry in the finance pack. Okay, going ahead to the FMCG pack, I would say that FMCG pack has been able to bounce back from a pretty good long-term support, which is a 50% retracement in the monthly time frame chart. Last 4 weeks have been pretty nice pullback. Although this last week we saw that the candle which was made over here is looking like a spinning top, and one of the reasons is this entire resistance band, which is within 55,606 to 54,678, and this is you can see a strong resistance band. In case if this particular sector wants to go higher, then it should have the strength to surpass this. And trust me, it will not be easy, because you can see this cluster is very strong. Even prior to this, we had few lows multiple times. I think we have been able to bounce back. So FMCG pack will need to have an extremely strong momentum to break above this and go higher. So till the time we are not able to break this, I think it's better to stay away and wait for next few cues in the FMCG pack. Infra pack, I think again, good bounce back from the long-term support of 38.20% retracement. Very, very strong candle, which has been able to, you can say, almost it is looking like a engulfing pattern, a bullish engulfing pattern, which is a good sign. Weekly chart also seems impressive, high momentum, although the trend is flat. Trend is up in the daily time frame chart. You can see over here, RSI at 70, a classical sign of a start of a new rally. But we are consolidating. I think it should consolidate for a few days more. And after that consolidation, if you see some momentum picking up from the shorter term time frame charts like the 2-hourly or the 1-hourly chart, then I think short-term momentum traders can probably have a look at this particular sector. IT pack. Now, IT pack is, I think, the elephant in the room, which has been able to fall very fast. We are near the 61.80% retracement in the monthly time frame chart. Even in the weekly time frame chart, I should say that we are at a very, very strong support. This is the first time we tested this trend line, second time, third, and again fourth time. So this is a trend line which is holding on since mid of 2020, and it is a massive, massive trend line and a very respectable and a trustable trend line because it has been tested multiple times. We also have a Fibonacci extension over here, which is working as a very good support. But the last week's candle is something which is worth talking about. It is a inverted hammer sort of a candle, or you can also see it is a gravestone doji, which is a bearish candle. And imagine a bearish candle appearing just close to the weekly time frame chart support. And this is happening because prices are not able to stay at a higher level, even if we have a positive divergence. So I have seen very rarely this thing happening, but I think in extreme short term, I should say that some more weakness maybe for next couple of days cannot be negated in the IT pack. Overall, till the time we do not break this support, it looks that it will be a time to understand that we are at a long-term support, and any short-term traders trying to probably go short when prices are at a trend line support can be suicidal. But as soon as the sector is moving higher, I think we are finding these price gaps which were created previously when the prices were falling, and these gaps are providing immediate resistances to this particular sector. Okay, so be very, very careful when you are trading with the IT pack. Okay, apart from metal pack, apart from finance pack, this is again one of the sectors which tried to show its strength very, very early on, and it stopped falling. It started consolidating in the start of 2025, which is a good thing. And after this consolidation, we have a breakout. Now we are consolidating. Even the weekly time frame chart looks all right. I should say that overall looks okay, but some sort of consolidation is needed in the metal pack for sure. Okay, pharma. Pharma is a sector which has been able to bounce back pretty nicely in the previous month. Candle is not very impressive. Even it did not care to touch this retracement. It started bouncing back much early. Even the candles are fine over here, but the last week's candle is not very, very impressive. And the reason for that is possibly the prices were sensing that we are close to the previous high, which can act as a resistance. Now we need to pay some attention in the daily time frame chart. First thing is we do have H1 over here, which is the first high, and now we have an H2, which is the recent high. So if you have a look at this particular relation between the price, we'll say that, okay, we are still in a downtrend. If you have a look at this low L1, and this is the low so far. If we go further, obviously the prices will continue to make a further low on the downside. But as of now, on this Sunday, we have a low which is higher than the previous one. If you have a look at the dual candles which appeared on Thursday and Friday, they are looking like bullish candles because they had a wick on the downside. First one is a very strong hammer. Second one is looking like a hammer, but it is not, because the real body is not thrice the size of the, because the wick is not the thrice the size of the real body, but still I should say it is a bullish candle. I think once we start trading above this high of the candle 21,587, then I should say that some sort of positive momentum will be visible in the pharma pack. But till that time, it's like a very, very confusing state of trend in the pharma pack, because on one juncture we can see we have a lower high, and possibly this is a sell on rise thing, and on one juncture we can see that some sort of bottoming out formation is visible. So I think in next few days things will be much clearer than before. PSE sector. PSE sector, a very, very impressive pullback, bounce back from the 38.20% Fibonacci retracement. Candles in the weekly time frame chart, very impressive. Very good pullback in the daily time frame chart. RSI also very, very powerful. Overbought. Some sort of consolidation is needed, as we are slightly overstretched, not extremely, slightly overstretched, and we have also stopped at a previous swing high. So some sort of consolidation is necessary. Realty pack. Realty pack, I think we can see that the bounce back is trying to come on the back of this 161.80% Fibonacci extension. Initial pullback has been fine, but after the initial pullback, the last 4-5 days have not been okay, because the price is getting continuous selling pressure from the 61.80% Fibonacci retracement. So I think overall, if you look at other sectors, the pullbacks have been very, very strong. This is one of the sectors, just like IT, where a little bit of selling pressure is visible in the short term. Midcap. Midcap, again, a very, very fast high momentum pullback. Monthly time frame chart looks okay. After the first rise, some sort of consolidation is happening, and pay very, very close attention that we are still having a lower high. We have not made a high which is above this particular high. So I think some caution is important. Although if you start trading above 53 to 200, then some positivity will be possible. And if this consolidation zone breaks below maybe 51 200, then some sort of dip is also possible in the mid cap index. All right. So I think after analyzing all these indexes, summing it up all, I should say that it's a good thing that we have been able to pull back, and not just pull back, but pull back by a very, very high momentum rally. In almost all the sectors where we have given a recent pullback, except the IT and the realty pack, some consolidation is possible. So I think market is in a state of trend where it is trying to consolidate, and it's preparing to trend, because majority of the time market tries to prepare to trend, and then it starts trending either on the upside, either on the downside. So overall, we are in a consolidation, short-term consolidation phase, and next 1 or 2 weeks are going to be very, very decisive, where we'll have some sort of indication whether this is just a pullback or we are going to extend this rally on the upside. All right. So have a good weekend. Enjoy. Trade less, trade wisely. Thank you.